60-year-old, the 60-year-old with a 33-year-old wife.
So he's ghosting you, huh?
Yeah, yeah, it's funny because we had such a great conversation, and I even texted the broker that referred him to me and said, "Hey, I just sorry, you've just been replaced. I'm his new BFF." Ha ha ha. That's how good of a cover. And then I sent him, information, and yeah, I don't know. We'll
What'd you
see.
send him?
So we had gone to a point where we're talking about different options, and so it was essentially a comparison between return of premium, which he was very interested in, and it was a term because he wasn't necessarily interested in the cash value component. As a matter of
Mhm.
fact, it kind of turned him off. He was more interested in death benefit for his very young wife and very small children. And so the reason why he was referred to me in the first place was because what the other gentleman had quoted him was like so through the roof. It was like a mortgage. And so he felt that I might be able to help him with maybe better premiums. And I had told him, I said, we're not going to do significantly better, but I hope we can. But let's take a stab at it and see.
Couple of things. One, he was probably shopping. Let's be
Mm-hmm.
honest. He got a price he didn't like, so he went shopping. He got your recommendation. The general rule, if at all possible, is not to send someone either in the email or regular mail prices.
Mm-hmm.
Then he's got this in your hand, and he's like, "Well, what? How else can I?" So he's got the whole internet at his fingertips. What I might do to try and get back with him, not pounding the, hey, is my price good drum,
Mm-hmm.
but I'll just say it and then I'll get into fancy language. Get him to be concerned about how the death benefit will be managed and handled for her life and the kid's life, and bring him in more on an estate planning, maybe having the death benefit go to trust. You can actually have different trusts associated with one death benefit. So it could be what's called a spendthrift trust for his wife, meaning she pretty much gets the cash flow from it, but not the principal unless certain, conditions are met, health or whatever.
Mm-hmm.
And then, a carve out for the kids. She administers the lump sum, but, he wants to make sure the kids are definitely taken care of, no matter what, or if she gets remarried, the new husband go, "Oh, wow, we get this big pile of money. That's awesome." So that might be a way to pull him in, that you're doing more sophisticated planning with him rather than just being vendor of a policy
Right.
at a price.
Here's your price, right? Yeah, yeah,
Yeah.
yeah. Mm-hmm.
We're going to send it as an email. I think it's, "Hey, whoever, I was thinking about your situation. And in situations like yours, I often recommend using, don't name the trust because they actually have specific names.
Mm-hmm.
I often recommend a DUAL, dual trust strategy to make sure the resources that you're leaving for your wife, if you know her name, use her name, are properly managed and not wasted, lost to bankruptcy, bad debts, getting sued. We can make a list. And at the same time, the money for your kids is protected, professionally managed, to make sure that there's money there before they reach the age of majority. And if there's anything you want to impact with them afterwards, such as college, helping them buy their first home, start a business, whatever. And we have to make sure we handle the beneficiary designation properly, and we make sure we set up the right type of trust the right way with the right attorney. I have some folks that I work with. Da, da, da. So what you're trying to do is create doubt,
Mm-hmm.
get them to recognize this is just not, premium for death benefit, and that there's other work. Basically, you're trying to get him pulled back in
Right.
through these other concerns, because at this point, if he wanted to buy your policy at your price, he would have bought it already.
Mm-hmm. Right.
Right.
Right. Yeah.
So that's the only thing I can think of that would pull him
No, I
back.
like that strategy. I like the idea of coming in with more sophisticated ideas versus the
Yeah.
upsell strategy. I hear you.
Pick me, pick me.
One of the reasons why I included pricing in the first place was because he right out of the gates gave me a budget, 250 to 500. And so I had actually provided a scenario for three scenarios, a 10-year term. After discussing, by the way, how these things work, right? A 10-year term, universal, and then a hybrid 10-year term and universal. So
Did you happen to use the three methods thing with him?
no, it wasn't. The conversation was fairly quick.
Okay. Just another kind of tip beyond the estate planning hook. When somebody gives you a budget, so if I ask Tony, "What's your budget for root canal?" Zero. Right? He hasn't set any money aside for something that's unpleasant, right? If it happens, it happens. He'll deal with it. When somebody gives me a budget, so essentially they're saying, "I'm willing to spend this much money to get some unknown death benefit." What I always ask them is, just curious how you arrived at that budget range.
Mhm.
So before you kind of take an order of, "Oh, I have this much to work with," I want to know where he's coming from. with that number, because it's not based on providing a certain amount of income or cash flow. It's based on his willingness to give up 250 to 500 a month.
Right.
What if that's 50% of what his family needs?
Hmm.
And so that's what I would tell him. So, I often have people, start the conversation with something like that, which is perfectly fine. But I'm just curious how you arrived at that number. And would you be open to me doing some analysis for what you actually want to do in terms of providing your wife the stability of the household, and retaining the shelter and being able to put food on the table and everything, and then how do you want this to impact your kids from a standpoint of college and all, really really combat in your practice the ooh, somebody asked me for life insurance and they're giving me a premium to work with, and let me give you some numbers.
Hmm.
Almost run away in the other direction and ask them enough questions. Don't, the thing I've said for 35 years is, don't violate your process. If your process is to do an income loss replacement analysis, ask about debts, ask about income, ask about cushions, ask about college, then say, look, this is what I do. Now, if it happens that his death benefit matches up to the $500 premium, great. And if it doesn't, hopefully he's gotten to you've done the right thing with the emotions and the impacts and the consequences, and he's talked about how it would affect his kids and all that. And your policy comes out at $650 a month
Right.
because that's the number he needs. He's gonna be like, well, I was originally thinking 500, but I really, is there anything you would change in how we ran through the numbers? No, no, it sounds like the right number. This is what it costs.
Yeah.
Now, will he still shop you? I don't know. I'm just saying, don't violate your process, because the quicker you are to sort of be an order taker, and I'm not making an accusation, I'm just saying on a spectrum from order taker to advisor, the more you tend to the advisor, it's almost like a little bit of takeaway selling. Like, I'm not going to just take your budget number, punch it into my software, and come up with a number.
Hmm.
I'm going to do my professional job. That will actually gain you more respect and more of a reaction of, that's my guy.
Yeah.
Because, you're a total stranger to him because you were referred by this broker. You
Sure.
need to show him why you're different. And,
Right.
and if you're more expensive, he's not going to care because you've done the analysis. Anybody else, he doesn't need you at all. He could go to a website, put in a premium, and they'll tell him how much death benefit. It's so easy to do, right?
Yeah.
So that differentiator is essential, and that's why I mentioned the letter with the estate planning and the trusts and everything that would hopefully pull him back in. Tony, did you want to add something?
Yeah, I was gonna add, I know you said you didn't have much time to talk to him, but the three methods presentation, I can get through that in literally 2 minutes, minute and 30 seconds. And at the end of it, people go from budget to asking me how much they can put in.
Hmm.
So it doesn't take a lot of time to do once you get good with it,
Yeah.
and it's pretty effective.